Hello traders everyone, welcome to our new webinar. It's September 16th, so thank you everyone for being here. Before we can start, just let me know if everything is fine and not like last time when we had some issues with screen sharing. So let me know please in the chat box if everything is fine. Okay, so looks like that we are ready to go. So as you know, we have a very important week in front of us. There are a lot of anticipated interest rate decision from the Fed. So as you know, they are expecting cuts, but we are not sure if that would be a 25 or a 50 basis point cuts. But looks like that based on the recent weakness of the dollar, that market most likely anticipates 50 basis point cuts rather than 25, and you can see that these probabilities are actually increasing for the last week or so. Actually, just at the start of last week we got a 30% chance for the 50 basis point cuts, but now this one with today just increased to 65%. So it's not a surprise that we are seeing this kind of a movement, because as you know, the dollar and the US yields are still looking weak. And if we take a look firstly on the treasuries here, you can clearly see that we are still in a very nice clear impulsive recovery, and I think that more upside can be seen. Of course, there can be and will be some setbacks still on the way up within this wave C, and if maybe the Fed will really deliver the 50 basis point cuts, maybe we'll see some spike to the upside on the dollar and then stabilization, because a lot of price action can be and moves can already be priced in the markets. If there will be 25 basis point cuts only, then of course dollar could rally from current levels or from the levels that will be around the release. So of course dollar could be approaching still in, let's say, by the end of the month, we see dollar moving into some resistance, support, but for now we are still on track with these impulsive trends and sequences that we have across different markets. Also, if we take a look on the US yields here, where it is, I think here, just a second. You can actually see here that we are still looking for much lower prices within wave C, possibly even down to 3.25%, but there we could see this ABC drop coming to an end. So maybe that will be the period when the US yields could stabilize, when the dollar could also move sideways. But for now, we are still in this camp for more dollar weakness and lower US yields. And if we see any short-term bounce, this could be only temporary. Looking at dollar itself here, you can clearly see that there was a very nice broken trend line here. So I think that continuation to the downside could occur very soon. Maybe, as I said, maybe Fed will deliver the 50 basis point cuts and we will see a spike towards 100, 150 and then some stabilization. But overall, even if we see some rally from current levels and back towards 102, I still think that would be a very strong potential resistance up here. Okay, so I think that we are coming out of this consolidation and that sooner or later we should see a break below July 2023 lows. Once this will occur, we may start considering that we are going to travel here with the dollar weakness into some late stages of the current bear cycle that is already in place since 2022. So for now, as I said, dollar weakness still, it has room for some more weakness, but we certainly will have to be aware of some these bigger cycles once these lower levels here on dollar index will be reached. But for now, I just think that especially since last week, especially if you're looking and trading maybe some of the intraday patterns there, we have seen some nice rebound on the euro. And I think that this reaction on the euro is actually the main reason why we were also seeing some other markets, some other currencies also turning to the upside. As you know, there was the ECB rate decision last week. Of course, they delivered the cuts, and now when the ECB is behind, the focus is on the Fed. So since then, we are seeing a very nice move to the upside. And before that, we were already seeing stocks doing quite well. So I think that now when we have more dollar weakness and still stocks doing quite well, I think that this current cycle, current trend could actually continue. Now, if you look here at the Elliott wave pattern, I still think that we are in a very nice recovery mode. We found the support very close to 1.10 level, and what's the most important is that we have only 3 waves drop from that highs. So if you do some intraday analysis, you can clearly count this as a correction. And always when you have some very nice and strong uptrend like here, and then you see a counter trend move just in 3 waves rather than in 5 waves, then normally that's a bullish structure. So I think that this bull flag could actually be taken out, and I'm just wondering if maybe we'll have to wait till Fed rates decision, or maybe we'll see this reaction extension higher even earlier. I'm in the camp of more upside as long as we are holding this 1.10 level. Okay, so I've been repeating this level as a key support a few times in our past analysis, and I still think that it's a pretty good support, and especially because we rebounded away from it, I just think that we should respect it even more. So euro dollar clearly remains here in uptrend, and also we got some comments from ECB members that ECB will almost surely have to wait until December for next rate cut, okay, unless the data really surprise something. So this is something that could keep easily euro in recovery mode, but of course a lot will depend on the Fed rates decision, especially press conference from Powell, and what will be the message for further decisions. Most likely data depend, right? Also, if we maybe take a look at some candlestick formations here. Okay, we got some very nice candlestick here on a weekly chart last week here on the euro dollar. We actually stopped at these 200 moving averages, and I think that we are going to see now continuation higher. So it's a very nice candlesticks which suggests that we could stay in this recovery mode. Also, what I like is that we came very close to this 50 period moving average on a daily chart, and as well as RSI has bottomed at the 50 line. Okay, and as you know, whenever we are in uptrend and you see a pullback, this 50 line could actually represent the potential end of correction or timing for when the correction could complete. Okay, so it certainly has been a very nice and deep pullback here, so I would not be surprised if we are going to see more upside here. Also, it's not only euro, we even got some very nice bounce on Aussie, but commodity currency is not really moving that much. Even dollar CAD, I was expecting more weakness there last week after crude oil rebounded a bit, but as you can see, dollar CAD somehow did not provide any significant moves to the downside yet. So maybe commodity currencies are lagging a bit, but still I will be expecting those to start moving as well. Now, if you just recall what I'm looking at here, it's still I think that major bottom has been found here back in 2022. That was a very nice and strong push to the upside, and since then market is just consolidating. As you can see, ideally it's an ABCDE triangle. Now sometimes wavy is very small, but usually will be much deeper than this. Okay, so I'm very skeptical here. This wavy is already finished, but if suddenly, let's say, we see a daily close above 68.30, then certainly I should be looking and expecting much higher prices. But as long as we are trading below this trendline resistance, I just think that I will put this pair on the sideline and rather try to focus on some other also correlated currencies here, but with a much better structure here. Okay, so if suddenly, who knows, we see dollar turning significantly to the upside, I still think that major supports will be kept here a little bit lower on the Aussie, but this will not change my outlook here. I still think that at some point we will see more upside there. Also, if you look at the dollar yen, as you know, we have Bank of Japan rate decision this week as well. They could start slowing down potential hikes by the end of the year. And so far we obviously have seen a pretty nice and extended moves to the downside. We are certainly seeing this important supports around 137 up to 140. So this whole zone is very, very important. Okay, and also we are seeing these 5 waves down, so maybe we will see some stabilization. Quite convinced that they're quite happy with Japanese yen at the moment and the levels, so maybe we will see some stabilization. Also, I recorded one video, let me check, it's here on the blog post. I'm not sure if I posted this on Twitter. Here's a video about dollar yen in connection with stocks, and I think it's quite important and interesting, because if we consider the correlations, let me just remind you that here back at the start of summer, okay, dollar yen actually moved to the downside when we got this inflation significantly softened in the US. Japan also intervened in the FX market. They took advantage of the momentum, and that's the timing when Nikkei moved to the downside. And at the same time, not exactly the same time, but then when we were seeing Nikkei moving to the downside, even other stocks started to move lower. So if we'll see some correction and then another sell-off, okay, on dollar yen after this wave B rise, I'm just wondering if that could be the similar timing when actually stocks could start moving into resistance. So for now we are not at this stage, but I'm just saying that if we'll see corrective wave B rally, which in my opinion could show up, and then when this correction is finished, I would be expecting much more downside here, meaning that Japanese yen could strengthen significantly when this wave C gets going, and that's when stocks could also see a very strong decline if we consider the correlation that occurred here during the month of July and August. Okay, so possibly now we will see some stabilization here. I'm not interested to trade the dollar yen at the moment. I'm just observing the levels here and just realize that Japanese yen could be very volatile still going forward here. Okay, but the big picture for me is very clear. I see impulse down. I think that whenever we see this corrective rise, we will see further weakness here on dollar yen. And why I think that this maybe 137, 140 is very important for dollar yen. Well, if you look at the COT data, by the way, I'm looking this at the bar chart here. And you will go to dollar yen. Let me go to like 5 years, and you will see that large speculators actually, let me do it to 10-year here. You can see at what levels we are, at what extremes actually. So I'm thinking that this current move higher here on Japanese yen across the board could certainly be running into some potential resistance with Japanese yen, meaning that yen crosses could rebound. So watch out these levels. I think that we are moving clearly into some extremes here that should not be ignored. COT data, of course, is not always useful, especially not week by week. But if you look at those charts, let's say a few times per quarter, I think that that it could be quite interesting. Can give you a lot of information actually what may happen next. It's also useful, especially when it comes to markets that are trading at new highs or at new lows, like maybe gold and silver. This could be quite interesting if you will watch this data over the next few weeks. Now, if you will look at gold here, as you know, we finally got this break to the upside. We've been calling for this push higher, but keep in mind that we are still possibly in these very late stages here of this impulse up from that's actually up from October 2023. Okay, so we could be running into these late stages of this fifth wave, but still there is room for, as you know, because there are quite big ranges here, still for another $100 rally or so. It means also that because I see a lot of more upside potential on silver, it means that possibly gold silver ratio could maybe could start moving to the downside. We have seen actually a move or turn to the downside last week, so maybe silver is now trying to catch some upside momentum here and join the gold. But certainly I'm very bullish on gold. I just think that whenever we are start seeing maybe dollar that will stabilize a bit, when the US yields will stabilize a bit, that's when we should be aware of a new potential corrective cycle here on gold. But for now, I just think that it's looking at silver, it's much more interesting and attractive. Now, if you recall, on silver, I actually presented you 2 wave counts. It was 2-3 weeks back when the price was trading down here around 28. So back then we said that either that's an ABC decline and you should expect a 5-wave rise beyond this May 2024 highs, okay, to complete the whole sequence. So either we were expecting push to the upside into wave 3 of a 5-wave structure, or as an alternate scenario, we presented you this leading diagonal and said that this could even be wave A, wave B, and you will see wave C to the upside. So in both cases, we expected third leg rally, and we still don't know if that's wave C or wave 3. I don't want to be too smart, but of course, because of correlations, because of weak dollar, because I still think that the S&P 500 can move to a new all-time highs, I just think that it's more appropriate to look at this wave structure, bullish one, as a primary wave count, especially if we also consider that with this labeling you are staying with a higher degree trend, which is up for the last few years. But the idea about these 2 interpretations was that actually both suggested and were pointing into the same directions. And whenever you have these clear wave counts showing you the same directions, I just think that it can be even more attractive for potential setups. So now when we have prices here, I still think that maybe there is room for this week to see $32. Then maybe some pullbacks could occur, and if we see one, just watch out this previous swing high around $30 to be maybe a new support. If this one is broken, then definitely this silver could stay sideways for a slightly longer period. Also, as I said earlier, last week we have seen turn to the downside here on gold silver ratio, and you can see this clearly here on this chart, and that means that this could actually be the real bull run. Okay, could suggest that both gold and silver are still in uptrend, but silver could be a much better performer going forward. Now let me just check my notes here. Now here we have also the S&P 500. So stocks clearly, I mean, you should definitely stick with the bullish wave count here. There's no reason to fight this trend, especially because we got, after all, we got this 10% of a pullback here, and we are quite close to these all-time highs. Of course, maybe we'll not see a break just immediately higher yet here, but I think that maybe after the Fed, when there can be much more decisions made by the traders and investors, I think that we could see then even more gains. And possibly we are now trapped here in a triangle, so maybe this upward trend line will not be broken just yet. Just be aware of some setbacks here, and if we see one, the lower range of this triangle could provide maybe a very good support at the end of this week. Now, I like the VIX. As you know, we talked about this a lot, how it spiked here in August, and now markets come down a little bit, means there is no fear involved, and usually you want this type of status here on VIX for stocks to easier to continue higher. And if you look at some other major indexes as well, there you can clearly see that we are tracking these consolidations that, in my opinion, still belong to ongoing uptrend. So we have incomplete bullish wave structures here, but whenever we start moving to a new high, here close to maybe 5,800, maybe 6,000, that's when we should be very, very careful. As I said, if you just remind what I said about the dollar, when the dollar will fall to new lows, I just think that that's when we could start moving into late stages of that dollar decline. At the same time, we could be with the S&P 500 trading at new highs here. And whenever you will have these 5 waves up, you know, especially if we go out of a triangle, that's when you should be very careful and be aware of potential limited upside, or maybe even change trend in 2025. Now, if we look at some of stocks, okay, someone just asked for the S&P 500, so I believe that I just answered your question here. So now if we look at stocks now, semiconductors here, they have seen a very nice rebound from around 200. It was the support that goes back to April, and notice that we got a very nice rise. Looks like that's an impulse here, right? And we had a correction, so I think that continuation higher could be in the cards. Maybe this will still be just an ABC rise up to this unfilled gap that goes to July of this year, and then who knows what will happen up here. But at least short term, I just think that there is room for more upside. Okay, and once we will fill this gap, market could actually start slowing down a bit as well, because certainly this much more complex wave 4 would also be a very valid scenario. But at least short term, if you try to maybe to analyze the markets and go with them step by step, I just think that at least a break above that swing high from August should occur, and then even we can see fill the gap here. Could you please take a look at Bitcoin? Yes, I will look at Bitcoin, but as you know, Adele, we have quite, I mean, not really interesting price action on a short-term basis, so our big picture is still the same, but I will definitely look at it at the end. Now, if we take a look also on nvidia here, well, last week I also posted this one on our to our members in the chat room. I think I shared it on Twitter as well, and we mentioned that 78.6% is a very important level. Okay, it was important level because somehow we thought that we could see price staying sideways here within this triangle. Okay, and because we have seen a rebound, we did know at that time if that rebound will occur, if that would be a triangle. But the idea was that we're still seeing ongoing correction. Okay, either we will see a rebound and market will stay sideways, or even these key levels around 100 would be broken and we will see a deeper ABC correction. In either case, at that time and still this, it's an incomplete correction. So it means that we should be prepared on more sideways price action here before eventually we can break to the upside. Because if we are in a triangle, then you are missing waves D and E. We could be now in a wave D moving to the upside, but really a real breakout should occur once we'll have all needed sub waves in place here. But overall, I just still think that this uptrend is alive and that we could see actually new highs. But if we start breaking from any reason these levels below 90, then watch out for even 75 if not lower. Okay, so as long as we are above that level, I still think that this is quite good potential bullish structure. Also, we covered AMD as well. I think it was 2 weeks back, if not last week. We said that we have very nice 3 waves of decline, sharp rise from that new lows, and then I think that we have seen a corrective wave B. We stopped at the 61.8%. It looks like that we are now pointing higher. The most important, as you will hear me a lot talking about, are going to be unfilled gaps. Okay, and you can see that we have one going back to July of this year. So I still think that this looks and can be like a potential magnet for this third leg rise. Could be wave C, could be wave 3. It doesn't really matter at this stage. Okay, what's important at this stage is that we are above 121 lows, that we stabilized here at the fib levels, and that we are turning to the upside, which could be wave C pointing towards this unfilled gap. Now, if we also maybe take a look at Meta, because we covered this one last time as well. Still looking for a triangle. It's a bullish pattern, right? You have very strong uptrend, you have higher highs, higher swing lows, especially here, since we covered and filled this gap from February, and you can see higher swing highs here. So I'm thinking that market is trying to build a momentum here, the bullish one, for a potential breakout, especially because we have some very nice ongoing triangle formation here. So as I look and walk you through these major stock markets, I just still think that there is room for more upside. Maybe Fed will try to support the markets. You have the elections, as you know, during the elections, stocks try to be positive. So I'm thinking that we still have some time for these bull runs to run before they run into some very late stages of these higher degree cycles here. Also, let me take a look what I have here. McDonalds. This one also has a very nice, beautiful pattern. I wasn't really sure actually back here in January if we topped out, okay, or are we going to see a flat formation. But notice what happened. Market just moved to a new high, just slightly cleared the highs before it pulled back, and then just slightly cleared the lows here. And that's very nice trap formation, that's how we can call it as well, for a flat, where you see both sides of the traders being cleared out of the market before the market finds real direction. And why I think that real direction is now being found, and why we could continue to expect more upside here, is because you have some very nice higher highs, higher swing lows, very strong impulsive reaction here away from that July lows. You can clearly see that I can count this as an ongoing impulse where you have this wave 3 extended. So I'm thinking that more upside should be seen. If you see a dip, I think that this can be a very nice support on this ongoing wave 4 here around 280, where you also have this gap, breakaway gap. If this one will be filled, I think that's a new major support for a new push to the upside. It was also some very nice support here, resistance here, breakout with a breakaway gap, and now if we see these levels, could be again very nice support down here. Also, before we can call end of this impulsive sequence, you certainly need to see 5 waves up, and that's not the case yet. And if we think that drop from here, that was from 2023 May to this 2024 lows in July, was a correction, then this correction should be definitely fully retraced before we may even consider that we are running into some late stages of this recovery. So I think that this stock market is still doing is looking quite well here. Okay, now let's take a look on Bitcoin. Firstly, liquidations heat map here. Nothing has really changed, as I said earlier, that we're actually just seeing some very nasty price action. But there is a chance that market will resume to the upside. Let me just remind you that we still have this overlapping price action. Even if longer we stay trapped in these ranges, I will be even more convinced that that's a correction, because always when you are dealing with the wave counts that are not very clear or give you different possibilities regarding labeling the wave structure, well, usually that's the most important evidence that this is a correction. If you are struggling to find the right wave count, the right look, usually that's the important signal that this is a correction. Okay, and clearly we have some overlapping price action here away from that April highs. And also what's important, you have still a lot of liquidation orders here, meaning a lot of stop losses from those who are short, around 70,000. So I still think that this can be like a magnet, but I'm not really sure if we'll see a retest of the lower prices first before market really takes over here. But overall, I just think that Bitcoin is still in uptrend and that the recovery is not done yet here. And if you look at some of the ETFs here, actually here, maybe this one shows even better picture here. You can clearly see that this one has made a very nice corrective pullback this one looks to be trapped in consolidation. So I certainly think that there is still a lot more upside potential. Of course, if you're looking and trading altcoins, this could be may not be easy actually to find maybe the proper altcoin. That's why you have to be spread across different altcoins if you're looking for this kind of investments, but I rather stick to these major ones, and I still think that Bitcoin clearly should see more upside. If you just give you a reminder what we have been talking about Bitcoin here on a weekly chart, as you know, usually when there was a consolidation through summer months, then at the end of September, ideally in October or November, we were seeing very strong breakouts, and maybe now we'll see a very similar period here, but certainly we are not there yet. We're not seeing breaking out yet, but I think if we consider the elections, potential more upside on stocks, still dollar is weak. I just think that there can be still timing coming when we will see more upside here on Bitcoin. Okay, traders, I hope that you enjoyed this presentation, this video for the start of a new week. Please make sure to subscribe to our channel, press a like, leave us a comment if you are watching this recording later, and follow us on Twitter or visit us at wavetraders.com for more analysis in premium sections. Traders, enjoy your day and talk to you soon. Bye.